Welcome back to Lunch at the Market. We are finally getting the nasty day in the markets that so many bears have been looking for. The Dow is approaching a triple-digit decline. If we get close to down over 100 points on the Dow today, then there's a very good chance we could see a week of selling next week, as we only have Alcoa on Monday and JP Chase on Friday. Earnings season will kick off in earnest on January 17th. On Monday the 17th, you'll get earnings from FCX, HCBK, KMP, MCD, PETS, and RJF. Now, we don't own over half of those names, but companies like Raymond James will give us a look at the health of the individual investor. Pet Med Express Inc. will let us know how consumers are spending on their pets. Hudson City Bancorp is a regional bank we like and own long. McDonald's is always great tell into discretionary spending for not just the U.S. consumer, but much of the world. Freeport will give us a look at how much money is actually being made by companies who actually pull copper and gold out of the ground. We know the metals have been hotter than hot, but are those who mine the stuff seeing profits? Combine this with Alcoa and JP Chase next week, and we'll know a lot more about the economy, the consumer, and the profits of publicly traded corporations in about 10 days. What are we doing today? We are selling spreads, of course. We've sold some spreads in all of our favorite names today. We sold DEC, January 75.70 put spreads, Fire, February 22.5 20 put spreads, FFIV, January 125-120 put spreads, and MCP January 48-43 put spreads. For those who may be new to options, keep in mind that a spread, by definition, is long one option and short another against it. Take the example of MCP, Molycorp. The stock is down 1.6% today and is now trading at $51.93 after falling from $62 just this Wednesday. Down $10 in 2 days, we are selling the 48 put that expires in 15 days to take in some credit. Get paid for selling the option. In order to protect us and our clients from a truly terrible decline in the price of the stock, meaning if it keeps going down, we will buy the 43 put long. Now that we have protection in place, the most we can lose is $500 per spread. The goal is to make it to options expiration with the stock trading above $48. If we do, then we'll keep 100% of what we were paid to make the trade. In this case, $115 per spread that we sold. Make sure to do this spread as one transaction so that you don't have to pay extra commissions and so it gets seen as a spread. If it goes against you, meaning the stock trades below $48, please be sure to roll that either out or down and out to February to avoid taking a loss. Hope that helps. There isn't a ton of things to talk about until we start seeing some earnings. The conference call regarding the acquisition Fire made on Wednesday was great, and the company is extremely confident that the buy was a good one and will help them to be more competitive. Fire is getting hammered again today, and we will once again be adding to our holding in the name. We'll likely have to roll our January put spreads down and out as well to avoid losses. Thanks for tuning in again today. If you want to hear the conference call, just visit SourceFire.com and click on the link that says SourceFire acquires Immunet. Don't forget to listen to all of the conference calls in the next few weeks as they happen live so you can have your homework done and be ready to make decisions. Have a great weekend, and we'll see you on Monday for the National Championship. Oh, and go Texas A&M Aggies tonight.